All right, today I want to talk about the impact that millions of new investors are having on the stock market. And you could analyze this in a couple different ways. But first off, if you look at this graph here, from 2013 to 2020, the average large cap in the S&P was trading at about a 16, okay, 16 times earnings. Then during the 2020 pandemic, we had roughly 10 million new investors come into the market, okay, because there was that huge crash in March of 2020. Then, since then, over the past 6 years now, the average large cap has been trading at about a 19. Okay, so it's gone from a 16 to a 19 on average. That's a big jump. That's a really big jump. And so that was with 10 million new investors. Now, what I'm linking this to is these Trump accounts that have come out that is giving kids pretty much they have the option to whatever the government can give them $1,000 when they're born. Parents can invest into it, all this stuff. And I don't know all the rules, but basically I came up with this idea 3 years ago. I posted this online talking about how this would help so much with poverty and just the average citizen here, that if the government gave them $10,000 when they were born and let that compound until they were 18 or so, whatever, then that $10,000 would be six figures but when they're 18, right? And so I mean that would help a lot of people out. If every single kid who was 18 or 20 years old had $100,000, $200,000, whatever it was, that would help a lot. That would set everybody up for success in their 20s. So that was my idea. I guess it took them 3 years to figure this out, and Trump was probably watching my TikToks or something and got that idea. But I think it's a great idea because I do think it's a great way for the average person to build wealth and kind of help them out in life. But the point of this is that there's a couple different things this impact has. So we had 10 million new investors in 2020. Okay, it says I just read 15% of all current stock market investors got started in 2020, which is insane. Now we're going to have millions more, at least I think it's 6 million plus that have already signed up. We're going to have another, huge this generation now, we're going to have another huge increase in the number of investors. So what does this mean? This means a couple different things. Number one, since there is more people, that's obviously going to push the stock market up because there's more cash flowing into the market, which is a good thing if you're a current investor. Because I've heard other skeptics of stock market investing, people that don't exactly agree with me, but they kind of look at the stock market like a pyramid scheme. And although it's not the same thing, it operates very similarly because, for one, for a stock to go up, the stock goes up, the valuation of your shares or of that company goes up because somebody else is putting more money into it. Kind of the way a pyramid scheme works. So it kind of does work like that. So if you are already invested in the stock market and millions of more people are putting money in, that's going to be whatever, $1 trillion plus, that's going to go into all those stocks across the market. That's going to push those companies, all these stocks up, especially just an index fund, right? Like the S&P or the QQQ, whatever. But what that's doing now is my thesis is that the average PE ratio is going to be higher now going into the next 5 years, 10 years, just like we saw from 2020 to 2026. I think the next 10 years, we're going to see this increase too. Probably the next 5 years, really. It's going to, the average large cap is, instead of trading at 19 now or 20, it's going to trade at 23 or 24 or something, right? Because now it's more competitive. There's more investors buying the same stocks. Now there's more people buying Apple, Amazon, Google, Microsoft, whatever, the index funds. There's more money going into that. So, and you could say it's based off of earnings because typically that's the way the investing in the stock market is supposed to work, where the company's earnings pushes the valuation up. More people buy the stock when the company earns more money, right? The asset is worth more if it's generating more money. But it doesn't really, that's great in theory, but it doesn't really work that way because look at Tesla. Tesla's earnings have not done well, but guess what? The stock has maintained 300-400 times earnings for years now, and doesn't matter. It's just about what investors think. It's all about sentiment and what investors think the future is going to be like and all that. Look at AMC and GameStop. That wasn't linked to earnings, but those stocks skyrocketed. Again, that was more of a joke. But that was just because investors wanted to put their money into it. So if everybody wants to put their money in a stock, that stock's going to go up. All that cash flows into that asset, pushes the valuation and the market cap up. So that's really all it is, and that's why with all these new investors now, I mean, I remember them talking about this 5 or 6 years ago when the 2020 people got into the market. it made it where the crashes were happened really fast. They happened fast and then they recovered really fast. And that's what we have today. Look at 2022 was a huge crash. It wasn't like it just falls a lot in a short period of time because everybody is selling, right? There's more people now. So everybody sells at the same time. Then whatever, a little bit of good news kicks in a couple months later. Everyone buys back in. Same thing happened last year in April of 2025. It was the same thing. That one was even that was way shorter though, right? It only lasted barely a couple months, not even maybe a month or two, and then it recovered. And so that's all. I think that's the main impact that this is going to have on the market is more volatility, more extreme drops and rises in stock prices, and then your new standard now for a PE ratio is now going to be higher even in this past 6 year span, because now I think these Trump accounts, if they're adding 6 million, 10 million new investors over the next couple of years, that's going to be more money, right? And that's more money than once their accounts get started. As they grow up, those people are going to put more money into those accounts. It's just more and more cash, more and more volatility. It's more liquidity and stuff, right? So it's going to be more, I think we're going to see more 30% moves in a stock even on a daily basis. So that is my theory on this, but let me know what you guys think down below.